Hi, this is Tim Bost with FinancialCyclesWeekly.com. Today we're going to talk about how you can use a solar eclipse to snag over 40% profit in the stock market in just 11 weeks. For those of you who've read some of the many things that I've written and produced in the area of financial astrology over the last several decades, you know that solar eclipses are one of the most powerful trading tools that we have for enhancing our personal net worth, for making money in the stock market. In fact, in the solar eclipse of January 2010, its impact on the markets, a monograph we published in December of 2009, we pointed out ways that you can use the power of solar eclipses to make more money in the stock market. And in that monograph, one of the stocks that we featured was Incyte Corporation, traded on the NASDAQ, symbol INCY, pharmaceutical company, and Incyte was one of those stocks that we identified as being impacted by the solar eclipse on January 15th, 2010, and we highlighted it as a trading candidate in that monograph on the solar eclipse. So what we wanted to do was share the strategy that we used in trading that stock. We had four basic principles that we apply with our solar eclipse trading strategy. First, we enter a long position a couple of weeks following the date of the eclipse itself. Secondly, we look at every price pullback as potentially a buying opportunity for the stock, especially if we get confirmation with planetary price support for those pullbacks. Third, once we have a trade that turns profitable, we trail a stop to lock in profits. And in this particular case, we were reevaluating our trades around the middle of April, April 12th to 14th, 2010, when we had alignments of the solar eclipse with the two eclipse midpoint and the eclipse point from January 15th. So this is our eclipse trading strategy, and with Incyte Corporation, INCY, this is what the stock looked like on the day of the eclipse, January 15th. It closed at $9.86. Our first buying opportunity, however, did not come until January 25th. We had a movement down to a Zeus price line, providing support for the stock, and then a rebound off that line. So we got the downturn that we had been looking for, giving us a potential entry point. The confirmation with the planetary price line in this case was quite strong, quite definite. So we decided to buy at the beginning of the next trading day, which in this case was January 26th. It opened at $9.75. We bought at the open price and immediately set a stop loss order at $8.64, where there had been a price gap before on a Mars support line a couple of weeks previously. So this is what determined our stop loss level initially in the trade. We moved into the trade then on the 26th of January. By the time we'd moved a week later up to the 5th of February, a couple of trading weeks later, the stock was then trading at $10.19. We left our stop at that 864 price level at that point because we had seen another downturn in the price of the stock. It was moving back down toward our purchase price level, so we wanted to be conservative about our adjusting our stock at this point. However, by the time we moved to March 1st, we had the stock surge up in price. It closed at $11.50, so we moved our stop up to $10.10, locking in profits in the trade by March 1st, about 5 weeks after we had entered the trade. Then it moved on up to $12.99 on March 16th. Again, we trailed the stop, adjusting it to $11.13 at that point to lock in even more profits. By the 30th of March, INCY was trading at $14.01. We adjusted the stop again to $12.03 at that point. Again, finding the correct low of the stock right on Mars support. So this provided a planetary confirmation for our stop loss level at that particular juncture. Now we got to April 12th, which was our critical date that we had identified in advance as a potential date to reevaluate our trade. At this point, the stock had begun to hit a little bit of congestion, was trading at $14.78. So we got very aggressive about moving our stop stop up here. We put it at $13.82, just under that congested area the stock had been trading in. And then, sure enough, on April 16th, the stock pulled back. We hit our stop loss at that point, and we're out of the trade at $13.82 on the 16th of April. So let's look at the results then that we got with Insight Corporation. We bought at $9.75, sold at $13.82 for a total profit of 41.7%. If you had traded 500 shares in the stock, this would have been a profit of over $2,000 on a fairly modest investment at that point. The critical thing here is to understand that this profit of 41.7% came in just 56 trading days, a little bit more than 11 weeks. So this was one of those extraordinary opportunities that we were able to identify ahead of time to trade with the eclipse and get great profits from the market. Of course, there are more eclipse trading opportunities just ahead with the solar eclipse on the 11th of July. And we have our new monograph coming out here, the Solar Eclipse of July 2010, its impact on the markets, which shows how you can use the power of solar eclipses to make more money in the stock market with this eclipse cycle. This new eclipse monograph, the Solar Eclipse of July 2010, its impact on the markets, is available. You can get it at http:/tinyurl.com/July Eclipse 2010. This is Tim Bost with Financial Cycles Weekly. Thanks for watching this video. Look forward to talking with you again soon.